Mark Tucker, the CEO and president of AIA. And of course, 2011 was a very difficult environment. Everyone expected this drop in headline profit. Do you think it's an accurate reflection of how you performed last year?
I think the most accurate perception of how we performed is within the three main indicators: the value of new business, the operating profit after tax, and the embedded value. The net profit takes into account, each insurance company has a different definition of net profit. Ours takes in equity gains and falls. Last year we had a $1 billion gain, this year we had a 200 million fall. And that's why we go to the underlying profit. That's why the underlying numbers are so important, because they give the stability, they don't give the accounting volatility.
So value of new business up 40%, and this comes as a bit of a surprise to me, because I thought the Thailand flooding would have had a bigger impact on your balance sheet.
Yeah, a very strong performance looking at the group. The first half of the year, value of new business was up 32%. Second half of the year, up 46%, being 40% for the year. And it's a very strong performance. Hong Kong, Singapore, Malaysia, and really China coming through at a 50% growth, which was very strong. And Thailand itself, even though, as you say, had issues, the flooding issues in the last quarter, came through at 30%. And these are our biggest businesses, and the performance was very, very strong.
I want to get into some of these key markets in a moment, but I'd like to talk about momentum as we begin this new year. Obviously, 2012, everyone's hoping for a better year than last year. How would you characterize your business momentum starting this year?
We remain very excited about the opportunities here. We think we have the right platform. We have 14 markets across the region. We have 100% ownership. We're in the right places with the right businesses. We have the right priorities in terms of distribution, in terms of product. And we believe we have the right people, and that combination in this time in Asia, we think provides us great confidence for the future.
Now, you've made a lot of changes since the IPO, and obviously you've worked to revitalize the business. How do you plan to build on that, given the environment we're seeing globally? And is this very tough global macro environment impacting your business at all in Asia?
Well, I think if you look at the macro environment and pull that in 2012 in the emerging markets, the emerging markets will bring about 80% of the world's growth this year. Half of that will come from China, and half of that again will come from China-related. And underlying that, the Asian economies, we believe, remain in strong shape. So I think we're confident of Asia's continued growth. And for us, we're not worried about short-term market indicators. If you look at the underlying, the fundamental drivers of our business, that's urbanization, family formation, emerging middle classes, demographics, demand for savings products, all of these factors remain very strongly in place.
I have to ask you about acquisitions, because we know that ING is planning to sell its Asian assets. AIA has long been speculated as a buyer of those assets. Can you tell us any progress, if that is in the pipeline, or if these kinds of assets are attractive to you?
Zeb, I think as you would expect, we don't comment on rumor or speculation. I think we have a strong capital and cash position, and we can look at opportunities, but we certainly won't comment on any individual opportunities.
What key considerations do you make when it comes to M&A, when you look across the landscape right now of the insurance industry in Asia?
Well, we focus. We have a very strong capital position. We have one of the strongest balance sheets, one of the strongest cash flows, and one of the strongest solvency ratio of any insurance company in the world. And the way we look at it is clearly investing primarily in new business opportunities from our existing organically. We then look at clearly making sure that the solvency, making sure the capital position is very strong so that we can withstand any of the volatilities. We then look at paying the dividend, and finally we'll look at whether we have opportunities, and we look at that on an incredibly financially disciplined way. If it doesn't make sense financially, we won't look at it, we won't do anything, and we're about creating value for shareholders, and that's where our energy is.
How do you plan to grow in China? Obviously, you have to compete with the local players there, but you are the biggest foreign insurer. How do you plan to grow market share in the Chinese market?
Well, I think if you look at the results, you saw an exceptional performance in China from AIA last year. On VONB, we were up 50% when the market was flat to negative. So I think you can see we certainly took profitable market share last year. It's more of the same. I think we're looking at premier agency, looking at making sure that we can get the best agents, best training, most professional, get the greatest number of products that add value to our customers. And the combination of distribution, the combination of product, and the combination of just the history and experience of AIA with the financial strength puts us in a very strong position.
I want to talk briefly about AIG. We reported on AIG's results leading into this interview, and AIG Chairman Steve Miller recently suggested the company might like to reacquire AIA as a way of expanding life insurance ops outside the U.S. Is this a possibility?
I think, again, with Steve or Bob, who have been immensely supportive to us, I can't comment. I think you have to ask them. What we focus on is the business, not the stock.
And in contrast, AIG could divest its stake over time. You've heard Bob talking about doing that to perhaps reduce the Treasury Department's holdings. Is that a likely scenario? Again,
I think that's a question that's best addressed to AIG. We concentrate on the company and delivering profitability.
Last question for you on the way forward for 2012. You've gotten good marks from analysts for your turnaround over the past year, agency productivity, lifting profit margins. Do you see yourself moving into more bank assurance, for example, as a way of boosting business?
Yeah, I think we look at a number of different factors. Premier Agency is really the cornerstone of our business and provides 80% of the profitability. But I think looking at profitable partnerships, looking at more work with banks, looking at more work with brokers, and I think also on the employee benefits, on the corporate solutions side, we have plenty of opportunities. So I think across those three areas, we remain excited and very confident about 2012.
Well, we wish you good luck in the new year. Mark Tucker, CEO of AIA. It's a pleasure to have you.